You have a business and you know at some point you're going to need an accountant, but it can be fairly confusing. Do you go with a firm that's charging 40 quid a month or the one that's charging 300? Do you stick to a local high street accountant or a trusted family referral? But really, how can you ever tell before it's too late whether they're actually going to understand your line of business? Because if you choose the wrong accountant, you can end up exactly where I was many years ago. And trust me, that wasn't a pretty experience. So let me walk you through how to choose the right accountant and when the right time is. Now, when do you actually need an accountant? Well, the first thing you need to figure out is at what stage your business is at. Because let's say you're a startup. If you're not trading yet, you don't need an accountant on a monthly basis or any kind of retainer. Now, you can reach out, make first contact, maybe pay for a one-off service. If your business model requires some initial work, booking a consultation if needed. But that's really about it, because 20 odd receipts and no cash incoming doesn't justify paying a monthly fee. If you've got a limited company at startup stage, you can get an accountant to file those end of year accounts, but keep the costs low, just one-off work. So let's say your business is at the stage of early traction. You're turning over an okay amount each month. The best thing you can do is keep records yourself, either in Excel or start using accountancy software early on, like QuickBooks or Xero, because all it takes is 15 to 30 minutes of reconciling every day. And you can give yourself a clear insight into your business's profitability. You can save money on bookkeeping, and that money can go straight back into growing your business. Of course, you'll still need an accountant at end of year, but you've saved real cash by doing the day-to-day yourself early on. Now, the next stage is the green light stage, and that is consistent trading. Revenue is becoming more predictable, your DIY books are starting to eat into your time, and you need to start thinking about paying yourself, and you do have a greater need for that insight into your business numbers so you can make smart decisions. At this point, it makes sense to bring on an accountant on a monthly basis. And your business structure does matter here. If you're a sole trader or partnership, you only have to file self-assessments. Many business owners, especially when turnover is low, it's about kind of box ticking and compliance. And so they can do it themselves. If you're not confident, then of course you can always pay a qualified accountant to do it. Now, if you're running a limited company, the format is more complex, and there is annual accounts and corporation tax that come into play. And unless you've had experience and understand HMRC and Companies House rules, I'd give that to a professional, because it saves you the headache and it can ensure tax efficient practice. So let's move on to how to find the right accountant. You don't need to look very far and you'll spot every flavour of accountant, charging anywhere from 20 quid a month to thousands of pounds. So you typically have your high street accountants, your more generalist firms. And these are often more expensive because they have bricks and mortar, premises, higher overheads. And normally they focus on the geographical area around them. And that means traditional local businesses. So if you think your local trades, your shops, often business models that are relatively simple and familiar to them. But if they haven't dealt with your business type, you'll likely feel like you're having to train them on how your business functions and how the operations are working, which isn't effective work in practice. Now, if you have lots of physical receipts and you put them in a nice big black bag and you want to kind of give that to your accountant at the end of the year, go to your local firm because they're really well equipped for that and I'm sure they absolutely love it. If you're more digital or non-traditional, a niche business, you'll certainly want to explore getting an accountant that is specialist for your industry. So that brings me on nicely to niche accountants. And as businesses are getting more complex, the need for niche accountants has increased. They focus on your specific industry, which means often there's fewer mistakes, greater efficiency, and better advice. And sometimes they even have their bespoke systems that are catered for your industry. So some examples are dentists with kind of complex partnership structures, farmers dealing with livestock valuations and subsidies. You've got property investors navigating the kind of labyrinth of tax rules. And then, of course, you have e-commerce, which is our world. Now, while you may think all accountants are equal, having someone who doesn't understand your industry can present a problem. Now, an example of this is a client who previously hired a fairly expensive traditional accountant who they thought, an Amazon business. Simple, right? But months down the line, HMRC did what HMRC do best and investigated. The accountant had ultimately been using bank payouts as sales figures instead of looking at the numbers in Amazon Seller Central. The result was about 85k VAT back bill. Now, I still have an image in my head of the accountant because we had a call with him, his hands in his head in disbelief. Now, it's not as if he did a bad job. He just didn't know what he didn't know. That was the price in choosing a generous accountant. Mistakes can happen, and ultimately, it falls back on you. So, why niche? Well, if you don't want to feel like you're training your accountant about your business, if you want to be tax efficient, and you actually want to understand your business, then go for an accountant focused on your niche. So now let's talk about cost-driven choices. Now, I've already mentioned that one of the things you'll notice is that there is quite a variety of price ranges. Different accounting services, lots of different prices. You may gravitate towards cheap if you only really care about ticking the box, compliance, because the business is small, simple, low turnover. Cheap can work, but it's kind of a heads up. You can expect minimal communication because ultimately time is money, and cheap means less of their time is given to you. They can give you poor tax efficiency sometimes. One client told me his kind of bargain accountant based in India, not qualified, simply put the numbers the client told him to and didn't ask any questions. When HMRC audited, there was no evidence. And remember, for the business, it's the director, not the accountant, who is ultimately liable. And you have to ask yourself, why is this so cheap? Many firms outsource to low-cost countries. Sometimes that's fine, but often it means they might cut corners or make sloppy mistakes. So now let's talk about kind of moving away from cheap. Let's go for the mid and the premium. And higher fees typically means you're going to get faster responsive, proactive tax planning, and then they're going to produce more frequent reports that can help you drive better decisions. And that's what we think of when we think of an accountant. You won't get that with your cheap accountant. These types of accountants have a return of investment through tax savings, and they enable you to make quicker and better decisions. So now you should have a good idea about this type of accountant you want. You need to think about the services you want. So let's just start with VAT. VAT returns, typically there are some accountants out there that will just do the reviews and you'll be doing the bookkeeping, but it's the bookkeeping that takes up the vast majority of the work, and it ensures that you have the lowest end VAT bill possible. So it's important that you probably look at getting an accountant to do that. It's fine early doors when you're a small business, but as you do start to kind of grow, does become more of a time sink, and there is a greater risk then of mistakes. Then you have your annual account, and you just need to make sure your annual account is included in any monthly kind of fee you're paying. You don't want to get hit with that lump sum at the end of the year, which is kind of common practice in some firms. Then you have things like payroll and self-assessment. You just want to check that they can handle those, because the last thing you want is to have multiple accountants or multiple kind of agents handling different things. You want it all under one roof for simplicity and then continuity between communication. And then you need to think about frequency of services. VAT returns are every quarter. You're going to need regular and up-to-date bookkeeping in line with that. So quarterly reporting can work really well. If you want to drive your business growth and you need to know about your numbers to make better decisions, then you might want to go for monthly bookkeeping and reporting. Perhaps you're planning to sell the business. Generally, a niche accounting comes in best there. They will typically know exactly what investors are looking for, so they can help you get to a position for a sale. You just need to remember return of investment. Understanding your numbers drives smarter choices, keeps you compliant, and ensures you're tax efficient. The right accountant should pay for themselves in the long run. They contribute to your business's success by giving you the power to make those informed decisions regularly while saving your tax. Finally, let's move on to some considerations and warnings, because there are things you need to watch out for. You need to ask yourself, are they qualified? Because anyone can call themselves an accountant. You need to make sure they have a professional qualification. Many accountancy firms are outsourcing, and it can hurt quality, it risks your data security, and it can lead to poor communication. And then you need to watch out for negative or fake reviews. Just do your homework. If it feels sketchy, walk away. Then there's dirt cheap pricing. Now that could mean they're not qualified or corners will be cut. If you pay peanuts, you're going to get monkeys. And finally, a lack of understanding. If they can't demonstrate they understand your business model in a call, ask yourself, would you risk your money on a gamble? The best move is to book calls with several firms. This is a good chance then to get advice from multiple professionals. Have a list of services you want, and remember to watch out for the red flags. Make sure you cover these, and also remember, you don't want to keep appointing new accountants. So try and do it right opposed to doing it twice. Now, I hope this video has been useful, and remember to like and subscribe. And if you are in the e-commerce game add us to a list of firms to get in touch with. Links in the description. Take care.